Hello, everyone. It's a pleasure to have you today with us. And we have our live discussion about crypto in banks together with our guest, Manfredi. My name is Oksana. I'm a partnerships manager of 3x Capital and program manager of 3x Education. And it's our pleasure to share the insights and knowledge about Web3 market with you. So today we will discuss really interesting event. And before we start, I would like to share once again what we are doing. Yeah. Good. Yeah. So basically, 3x Capital it's a digital assets investment and advisory firm. So we invest into early stage startups with focus in Web3. Our investment focus are DeFi, infrastructure, and Web3 user-centric applications. And right now we have 45 portfolio companies. We actively investing into startups, and it's our pleasure to share our knowledge and expertise with other people who wanna join the Web3 space. And also we support startups by providing them with knowledge and needed education. As a part of 3x Capital ecosystem, we also run educational program, Web3 Startup Fundamentals. It's 12-week long practical program in Metaverse that delivers fundamental knowledge about Web3 startups. And it's our pleasure to use Web3 technology to make the education. And quickly about this program, the program is for 12 weeks. And during the program, we share our knowledge at the lectures from our general partners and also our external partners. Also, we do peer-to-peer sessions, individual mentorships, liquid research portfolio meetings, and our mission is to empower uh, Web3 enthusiasts and give them more opportunities at the space. We run this program at Metaverse, so no location restrictions and no additional equipment needed. So we welcome everyone who want to join and study. And for now, we have the open call for sixth cohort of the program, and we have 25 spots to join the program. So please hurry up. It's last places that are available to join. And we already organized 5 cohorts. And as I mentioned before, we are launching the cohort 6 of the investment analyst program. And also we are adding new study tracks for Web3 startup founders and angel investors. And during our previous course, we already united together more than 100 people, spent more than 500 hours in Metaverse, and it's our pleasure to continue doing our work. So welcome, and in case you have any questions, do not hesitate to ask anyone from our team. And today we will have really interesting topic, crypto in banks, with our amazing speaker, Manfredi Anreini. And Manfredi, it's a pleasure for us to have you today. I'm really enjoying working with you during the program at the second cohort. And I'm really enjoying to see your growth, professional and personal. And I believe that your experience in credits use is really important for your career, and we will be really happy to hear some insights from your side for today's topic. So welcome, Manfredi.
Thank you, Oksana. Just checking. Yeah, it is okay. It's a pleasure for me to be here. I've always been grateful to 3x Capital for the opportunities that are being provided, and it's now amazing to be part of this event. Based on my expertise in traditional finance and decentralized finance, I would like to present now the audience with a bridge with the apologies. We have a quick technical problem with the presentation. We'll change the sharing in a second.
Yeah, so during the time, feel free to ask maybe your questions and your thoughts about the usage of crypto in banks while Manfredi is changing the presentation. Yeah, Manfredi, I was asked.
Okay, I believe we can do better now. Um, that's great. So let's apologies for technical difficulties, but we're now fully ready. So as I was saying, I would like to present you with a bridge today between traditional finance and decentralized finance and Web3. Uh, that is due to my expertise in a leading investment bank that is now emerging in a new Swiss reality. So from Credit Suisse to UBS to be a leading not only investment bank but asset manager, and with 3x Capital that provides great expertise in the industry for Web3 and centralized finance. And I would like to present the following agenda, in which we'll have a sort of zoom-in presentation. So we'll look at an update of the state of crypto adoptions, but it will start from a macro perspective. So from a macro perspective worldwide, we will zoom in from the world to specific countries to regulations and global markets in different areas across the world. And then we will zoom in again, finally, to large banking corporations, such as investment banks, asset managers, and to finally end up in single big banks and venture capitals to define and broad how they operate in crypto and to relate that, especially to 3x Capital, and see the differences in how two different financial entities like banks and venture capitals operate in the environment. So as a first glance that we have in terms of crypto adoption, we can see that there is a substantial difference from 2019 to 2023 in the last years that have been analyzed. Um, Now, while in the more developed Western world, we have a gradual adoption, as you can see from North America, um, in the graph, we have a different kind of adoption. There's been gradual all throughout Australia and New Zealand. It's worth noting that China, Russia, and India um, have slowed down their own adoption because of consequent bans on the use of cryptocurrencies. However, countries like China are planning to launch their own central bank digital currency soon. So for that reason, the crypto adoption will probably increase in the following years. Some other countries that are not in the fully developed world, but they are developing economies, such as Brazil, Argentina, Chile in South America. And as you can see, for example, we have Nigeria and Turkey that have experienced a more rapid increase in the adoption of cryptocurrencies, and the population is using it for different objectives. But now I would like to present you a sort of ranking of these adoptions and when they are located on a global scale. Ooh, apologies. So in terms of a global ranking, um, we can see that Nigeria and Turkey are at the top of the list, and then we have some other developed economies. They're actually free economies, so free world economies such as United Arab Emirates, um, South Korea, one of the freest economy in the world, Netherlands, Ireland, and for that reason, it's worth noting among the different years in which crypto has been adopted, and because we have relevant data, that 2022, which is represented by the yellow bars, it was an amazing year for crypto adoption because crypto skyrocketed during those years, especially in countries like Argentina and the UAE. Uh, it increased by multiple folds. I would say, one of the only countries where crypto adoption was not as steep in terms of increase was China, that you can see in on the right, and that was because after 2019 there were multiple bans by the Chinese government, and because of that, of course, the adoption was negatively impacted. Um, I can recall that um, there was a Bitcoin mining industry that was prominent in China because of the low cost of energy, and because of bans, that contributed to a decrease in that. The light blue line is a trend that depicts the situation in 2023, and we can see that a gradual increase, not as steep as 2022, is is positive and is a positive trend. So there is a further increase in the crypto adoption during this year. Now, as I said, we can identify two major categories for the adoption of cryptocurrencies. So we have, from one side, we have free economies such as uh, Switzerland, Singapore, Hong Kong. These are major, not only countries where the crypto have been adopted, but also there are countries where we have major financial activities. They are world financial hubs and world crypto hubs. So the lack of obstructive regulation, the chance to have a bureaucracy that allows and is crypto friendly and allows crypto businesses to flourish, is definitely an impacting factor. Another one, especially in the UAE and Switzerland, Singapore, is the low taxation, which is definitely an incentive for businesses to headquarter in these countries. But we can see immediately that crypto, so in general, cryptocurrencies and businesses that provide services in the space, do serve a purpose, and they solve a problem, and they insert themselves in the market to tackle some of the financial problems of, of today. Um, in fact, in economies with a high inflation, such as you can see here, Nigeria is 20%. Among this list, 20% is the lowest value actually. To top the list with Argentina, that is almost 3 digits. Um, Now, crypto also doesn't only represent uh, an alternative uh, in terms of business and economic growth, but is also a shield against high volatilities of national currencies. So it will also represent a hedge against high inflation and high inflation rates. So it can be a shelter against monetary policies that affect people's lives. Um, Nigeria also is at the top of the list because it's one of the first that sent release into the market central bank digital currency, and was very open with it and encouraged businesses in investing in it. So that is why it is among the best uh, in the sector due to in terms of um, innovation and high inflation. There are two factors that are impacting the adoption of cryptocurrency in Nigeria, which is also almost to 50% of the population. Now, let's zoom in from countries to cities, and let's look at the top 20 crypto hub cities. Now, London is at the top of the list, and the reason for that is, although compared to, for example, Dubai and Singapore, we have a different regulatory framework. So London, for example, is less regulated, but there is one thing that London has regulated correctly, in my opinion, which is stable coins. Stable coins are correctly regulated in London, and not only in London but also in the rest in other areas of the European Union. Although obviously the United Kingdom is no longer part of the European Union. The reason why I think is a great element is it's because London has one of the greatest foreign exchange markets in the world, actually the greatest one, and the volume that we can see in London for foreign exchange is the highest in the world. And another particular characteristic of the market is the fact that London is able to add cryptocurrencies to their trading volumes, which generates profits that are substantial for the city, and that is why it's at the top of the list. Now we have Dubai, that, as we said, have a great state incentives and also represent a great incentive in terms of low taxations and very favorable policies towards crypto businesses. Not only for that, the government has openly encouraged events to promote um, the use of crypto for business purposes and has centralized exchange such as OKX, Binance. They are have been asked to apply for licenses to operate in the UAE. Um, Another one is obviously New York, and we can see why. Uh, Now I'll show you some metrics that will fully represent why why cities like New York are at the top of the list. Because New York, although London, as you can see, you have the most crypto-based events and crypto-based jobs. Um, New York has the one of the highest percentages in terms of R&D, coupled with a lot of crypto-based companies. Actually, it's a world number one in terms of crypto-based companies in the city. So those two factors allow New York to be in the top three. London, otherwise, however, although it has over 1,800 crypto-based companies, it provides way more jobs with 2,173. Dubai is lagging behind, but the helpful and and great taxation that incentivized the headquarter. A lot of firms do headquarter in Dubai. Are certainly making up for it. Um, One of the cities that you may not have expected to be here is Zug, which is relatively unknown, uh, uh, especially to people that are in traditional finance, because it's not a traditional financial hub, but it is for crypto, and now is number six, as you can see. Now, the reason for that is that Zug is extremely famous for having hosted the Ethereum Foundation these days. Now, the Ethereum Foundation is no longer active, but um, it is important to mention that Switzerland has amazing uh, taxation in terms of crypto and allows for payments to government officials and government organizations um, in crypto. For example, Ethereum can be used for taxes and for tax purposes. And no, after the initial creation of the Ethereum Foundation in Zug, Switzerland has developed different frameworks to welcome cryptos. One of those is in the Ticino canton, which is an Italian-speaking canton in Switzerland in the southern region. And one of the main cities there, Lugano, has adopted as a legal tender Tether, which is USDT, and it also uses Bitcoin for payments, just like El Salvador. So has so Switzerland as a whole is offering different regulations in different cantons, which allow for a further flexibility of the environment and gives great crypto-friendly contexts for businesses to develop. Another one is Hong Kong, which is the last one we'll mention before moving on. The reason why Hong Kong is friendly is although China's banned on mainland most of the crypto activity, Hong Kong has declared, thanks to the Hong Kong High Court, that crypto, Bitcoin, Ethereum, they are property, so they can be um, not only they are available for custody services, but they also can be traded. And as a consequence of that, they've issued trading licenses, um, which have created a whole crypto operativity in terms of trading, and has allowed for exchanges to promote the creation of ETFs. But we will see that further as there are a lot of case studies for Hong Kong. Now, we'll touch on a hot topic, which is crypto, security, or commodity. That is specific for the United States. As you may know, the United States had a quite heated debate with the SEC, so Security and Exchange Commission, and CFTC, so Commodity Future Trading Commissions. And the debate is essentially whether or not crypto assets pass what is called the Howey test, which is the one that is used to establish whether or not an asset is a security or a commodity. Now, the reason that is a problem is because the Howey test is very vague and is quite general, and it wasn't used as much before, as the precedent of most of the securities that are in traditional finance is enough not to require the use of the Howey test, and everything is pretty much straight to a security when it comes to companies and the listing of companies in exchanges such as the New York Stock Exchange. But now the time has come for a different approach because a lot of crypto owners and businesses are highly worried about the fact that crypto might be identified as security. For now, it's mostly treated as a commodity, and the situation doesn't appear to change at the moment. But the problem with crypto being identified as security, such as, for example, some of the main assets that can be Bitcoin and Ethereum, UST, even Ripple was definitely a part of it. I would say it's because securities call for higher regulations, and higher regulations, as we can see, for example, we need different requirements such as annual reports, P&L statements, and ESG reports, which are difficult to do, especially because they defeat a purpose, which is crypto. They defeat the purpose of decentralization. And that is fundamental. That is crucial because in order to be able to produce reports, they are completely I'd say exhaustive, and they represent fully. For example, also KYC reports are one of them. So they represent fully their customer base and the profit and losses of the firm. With the multiple operation activities and the annual reports, an authority would have to supersede different crypto platforms and decentralized exchanges. Now that could be good for centralized exchanges such as Binance or Coinbase, but for the purpose of decentralization, there would have to be an authority that would govern the actual exchange, which would of course negatively impact the decentralization, and it would open and it wouldn't leave the processes to simple smart contracts, and so it could be detrimental for the development of the whole context. Another point that is important to make is the fact that when it comes to very restrictive regulations, the problem with this industry is that different governments have different approaches, and if there is a higher discrepancy between the regulations in terms of restrictiveness, the impact in the long term is that one country will develop a very solid and very advanced framework in terms of crypto, and another will be left behind. That's why regulators have come together in countries like the United States, and they have allowed looser regulations without cracking down on this reality yet, to make sure that development and investments are not negatively impacted by it. Now, to just touch on this topic, Coinbase which have declared multiple times that they do not list securities. So they've treated even the chief legal officer, the CLO, have declared that they treat most of them as commodities, as is the case right now. Um, they are one of the few crypto exchanges that are centralized that is a publicly traded company. Now, a lot of people and a lot of experts in the field have pointed out the fact that this may not be ideal, especially right now where the crypto market is highly volatile and is exposed to different breaches in terms of security, for example. Um, and that is the same argument that is presented by some companies such as SpaceX. Because if, for example, if SpaceX was promoted as a firm, a publicly traded firm, um, the high volatility, which depends on the success of launches of rockets, would definitely impact the liquidity of the firm and its equity and its value in the market. So the same reason can be Coinbase may not have made the best choice to list itself in the New York Stock Exchange so early. But in terms of long-term perspective, it's probably one of the best companies to attract capital just because of the transparency that is involved by listing itself on the market. Now, before we'll have a quick break, um, as as we are almost halfway through this event, I would like to touch a bit more in depth on the hardware test to identify whether or not crypto is a security or a commodity. Now, as I said, this test is just to give the most context possible. This test is definitely quite vague. As you can see, these are the usually the criteria that are applied to an asset to determine it. And now, the term security is usually associated with investment contracts. Okay, so it may qualify. An asset can qualify as an investment contract if there is a clear investment of money, which might be the case for crypto. Uh, because, for example, when we exchange fiat currency for crypto, that is effectively an investment of money. A common enterprise that is a bit more vague and it's a bit more difficult to evaluate just because some of the decentralized platforms uh, have have a can have a common enterprise, but at the same time it can be only one individual that is interacting with smart contracts. And expectation of profit, uh, cryptos may involve different services, but I would say expectation of profit can be argued that is definitely one of the strongest ones in favor of security. Um, and to be derived from the efforts of others. Again, in case of the smart contract interaction and some cryptos being simple layers, such as layer ones or layer twos, uh, you could argue that they simply provide what is called what is called as a simple currency to be used in a crypto environment. However, it's been argued lately that some some practices such as burns that it happens regularly for Ethereum or, for example, even BNB, there is a more centralized chain. Uh, those are definitely efforts that are used to impact positively the value of the chain without having too much inflation um, on on the actual value of the currency. Um, so for now, uh, we have finished this first part. Uh, we'll later dive in how regulatory frameworks tie to large banking corporations and how they react to different contexts and financial environments and how the financial landscape is modeled by these regulations and what the banks provide in terms of services when they have more access, more certainty, and more customer protection for the services they provide. So I believe it's now 4:33 around about 4:40, we'll have a recess, and we'll meet later.
Yeah, I believe it's a really good time to write your questions, and please at the comments, and we will answer them at the end of the meeting, and also we can stop during the presentation so we can cover the topic. But I believe for now we do not have any questions um, from the audience. But Manfredi, I have a question from my side. So we discussed lots of cities, and we saw like top 20 cities for crypto. What do you think? What is your projection after London and UK? Which cities will also allow stable coins?
So in terms of city that will allow stable coins, that calls for a necessity and a problem that is in the market that stable coins can solve. So one of those is, as I said, uh, mostly the cities in Switzerland, as Lugano has started it and has created precedent in the country, which I believe may be further extended to the rest of the cities in different cantons. I do believe in Eastern Europe in terms of uh, national turmoil due to external factors. Of course, I won't touch too much on the subject, but in terms of financial distresses due to external factors, um, that can be a solution to hedge against financial risks that countries might incur in, and also to provide an international uh, exchange in terms of a foreign currency. Um, that could be great. Poland is uh, one of the countries that has engaged in a positive regulatory framework to welcome cryptocurrencies. In terms of stablecoin, they are subject to the MICA, which is the European regulation for stablecoins. So with that, I would say in Europe it will have to be a probably collective adoption because of the policies of the European Union around it. But the Polish government has been widely open to do opportunity. So I believe it will probably was or could be one of those. Um, Another one is definitely um, Lagos in Nigeria, uh, because almost half of the population is already uses cryptocurrencies. The central bank digital currencies is already in use, and it's definitely an advantage compared to other economies such as the United Kingdom, France, and China, who are still developing it. So I believe that can be a great precedent for the country and provide it with multiple opportunities in the financial industry and also for businesses. So there's my answer.
Yeah, thank you for sharing, Manfredi. Yeah, I believe we do not have any questions for now from the audience, but highly encourage you to ask everyone who are listening. I'm sure that you have some questions that you want to ask because the topic is really trendy and lots of changes right now is coming. So it's interesting to have more details on it. And I believe in this case we can jump to the next part of the presentation, and as not see the full screen of the presentation, so in case Manfredi, you can fix it somehow, please do it, but in case no, I believe we will also share the presentation afterwards at our LinkedIn page, so everyone can check and receive all details and links to additional materials. So yeah, let's go.
In terms of that, I would like to try to make sure that the presentation looks best for everyone. I would like since we had that technical problem, I would like a quick feedback from everyone so that everyone can see the full screen, um, which I think might be optimal. But this is, for example, the first part. I want to know in case.
Yeah, let's go to the last part of presentation, and let's see.
For example, this one was a page that was impacted by this problem that we had. For example,
Yeah,
now we can see it fully. Do you think it's better? I would say that it shows everything fully. Um,
yes, yes, Manfredi, right now it's awesome. So let's jump to the
let's
to
keep
the
going
final
then.
part.
Perfect. Um, Now, I would like to present, as I said previously, um, we have a clear case with HSBC, uh, which has adopted different stance in crypto in two different countries. We'll now see the HSBC in terms of their approach to the Hong Kong economy, and then we'll see how the approach of the bank differs um, in the United Kingdom. Now, to give a bit of context, HSBC is one of the greatest banks in Europe. Is actually the number one bank in terms of market cap in Europe, with around $160 billion in terms of valuation. For the ones that are following us from the United States, it's not as great as some of the banks there, like JP Morgan or Morgan Stanley or Goldman Sachs, but it has a great relevance in the Asian markets, such as Hong Kong and Singapore. Um, and following multiple announcements from what is the equivalent of the SEC in Hong Kong, which is a Securities and Future Commission, so the SFC, um, which is it is an entity that has approved multiple ETFs that are related to crypto. So they have crypto as an underlying. Some of these are both are mostly mostly have futures as underlyings. So we have the CSOP Bitcoin Future ETF and the same CSOP Ether Future ETF, which are some of the main ETFs that have debuted on the Hong Kong Stock Exchange. And that is as of January 2023, so relatively recently. Um, so because of this regulatory framework, which provides with specific regulation on ETFs and on products that are related to crypto, um, and the customer protection, the clear certainty of the financial regulations that are well known to large financial institutions, and that mitigate, therefore, the risks that the institution incur when providing services to the customers. HSBC has decided to offer um, these financial products to clients. So HSBC has so far had a quite open stance on the provision of these sort of services. However, if we change it, apologies. In terms of ETFs in the United States, we have a clear. This is a picture from one of the main firms that informs on the current situation in terms of this sort of financial products. Bloomberg have covered it for years. Um, Now we have a completely different situation. Some of the greatest asset managers in the world, as you can see here, there are potential issuers. ARK, BlackRock, greatest asset manager in the world with almost 10 trillion under of assets under management. Invesco and Fidelity, another great asset manager. In 2023, this is quite recent because most of these, as you can see in the filing date, are after the half of June, and the only one with ARC is 25th of April. All of these have not been approved yet as ETFs because these are spot Bitcoin ETFs. And just recently, a couple of days ago, the CEO, the head of the SEC, Gary Gensler, has declared that both the filings by BlackRock and Fidelity are not adequate to secure an ETF on Bitcoin that has Bitcoin as an underlying. Now, there are some extremely important points to be made. First one is, why is an ETF so important with Bitcoin? If someone wants to be because usually, some of the ETFs have a basket of assets and allow for certain diversification, and differently compared to index funds and mutual funds, they are exchange traded funds, which means that they also give the investor the opportunity to have a certain trading operativity. So some trading operations can take place with ETFs. Now, and so the problem with so someone could simply ask, now why is the fact that we need an ETF with Bitcoin, so with only one underlying asset, because someone, if you want to be exposed to Bitcoin, you might just you could just simply buy Bitcoin without having an ETF that has that as an underlying. Now the argument for this is the fact that buying by Bitcoin ETFs allows institutions and large investors, institutional investors, so entities such as pension funds, hedge funds, to purchase Bitcoin without having to bear the risk of the uncertainty that comes with decisions such as, is it a commodity or a security? Which comes with the fact that, so without having been impacted, so either negatively or positively, by the fact that Bitcoin could be identified as a different financial asset of a different class, because the ETF remains an ETF, and so so it's a way to eliminate the uncertainty and be exposed to a much more regulated part of Bitcoin, as it's in form of ETF and it's just an underlying asset. So that is fundamental. Now, another key, and it's the last one, the last key differentiation for ETFs is spot and futures, because the truth is that futures, ETFs that have futures on Bitcoin, so they have as an underlying asset, future contracts are approved and running in the United States, as well as in the Hong Kong Stock Exchange and in Hong Kong. Now, the reason for that is because actually all of the future Bitcoin ETFs in the United States have future contracts that are cash settled. This means that the underlying asset of the future contract is cash. It's not Bitcoin. So although you have a relation to Bitcoin, and eventually when the future contract reaches maturity, it will converge on the current Bitcoin price. The truth is that the underlying asset to the future contract, so to the derivative that is used for the ETF, does not have Bitcoin. Does not have Bitcoin as a security. Does not have Bitcoin as a commodity. It does not have Bitcoin as an asset. So that's why it's much easier for every authority to approve it. And the spot Bitcoin ETF is a different reality, and it's now being put on hold by regulators, as none of these latest filing, latest filings by different issuers have been approved yet. So this is a reality that is indeed interesting and could represent a breakthrough for futures adoptions of major cryptocurrencies by institutional investors. Now, let's just jump right in and see where are big banks invested the most. within the context of crypto environment in the crypto landscape. Where are they focuses their investment? Where is capital allocated the most? Now, the logic behind big banks is that they want, or they have as a vision, to embrace crypto, to enhance their capability, to have the most reach, and to accelerate the growth in user adoption on most of their businesses, not only investment banking, but consumer banking, merchant banking, uh, and I would say definitely business banking, which is some of the aspect of banking that ties the most to crypto because it relates to crypto businesses. Um, so it's user adoption, customer reach, because with crypto investments, you can definitely reach of the customers that are operating in different niches of the market. So that is important. So technology innovation, which is represented by the blockchain technologies on permissionless payment and the approval of transactions, which may represent a further breakthrough in the fact that blockchains approvals of transactions can completely be a solution for the cross-border payments or cross-border transaction or even cross-border sharing of information among banks. So definitely, this technology is a relevant. I mean, one of the most important topics and a predominant one actually. And another one is the customer experience. Now, to keep moving forward, one of the most important uh, providers in terms of services are custody solutions and technology providers. Now, let's see more in depth which are the companies that have benefited from investments from top banks. In terms of top banks, we are talking about either bulge bracket firms or top banks in the world for market cap. So in terms of bulge bracket firms, obviously it's JP Morgan, Morgan Stanley, Goldman Sachs, UBS, Deutsche Bank, and so on. In terms of the others, they are not prominent investment banks, but have high market cap and are highly differentiated in terms of the services they provide. We have, of course, HSBC, Crédit Agricole, BNP, RBC, TD Bank. So these are the ones that are multinational corporations. Um, so one of the biggest services, the greatest services that can be interested for large banks is, as I said, custody solutions and technology providers. Now, the reason for that is because custody services allow for trading. So, in fact, most of the custody solutions that are in decentralized finance obviously have the problem of security. Maybe hackings, security breaches. So investing in some secure firms that are stress tested, they have a track record of safety, they have not been breached before, they have a solid framework in terms of technical security, in terms of anti-hacking. That is fundamental for banks because it provides them with certainty, and it also allows them to keep their reputation fully intact because there is no precedent of any breach in the security, no leakage of information, data regarding customers or funds. So we have NYDIG, greatest one in terms of funding received and products. Gemini provides different services. One of them is also Exchange, but in terms of technologies, is one of the pioneers in the environment. And Fireblocks is definitely another one of them. Now, as you can see, the assets under custody since the beginning of 2019 have increased by multiple folds. They're actually up 600%. So this is a sign that the industry is growing rapidly. The interest for these sort of services from large banks, from the traditional finance, is growing and is a sign that they would like to enter the crypto landscape um, with extreme interest with their funds and contribute to its development. Now, moving on, as another part of the custody solution and technology providers, let's see where some of the biggest banks have invested and how actually they have invested, because there is a certain corporate strategy to it. For example, Morgan Stanley and as well as Bank of New York Mellon, they made follow-on investments. Now, what are follow-on investments? So in terms of corporate strategy, as I said, there are serial acquisition strategies where the bank usually buys in a platform acquisition. Bank usually buys a platform. Okay, so it has 100% of its equity and benefits from its expertise and knowledge and information in the industry to make sure that they can identify proper follow-on acquisitions. So further investment in the future to different platforms, and that in and that is the case, as I said, for BNY Mellon and Morgan Stanley in Fireblocks and YDIGs. So they buy stake equity in different projects, different crypto platforms, and so that they can diversify their investments and also are in touch with the technology of multiple groups, multiple teams, and their expertise. So that is one of the strategies. Others, such as the Commonwealth Bank of Australia or GS Growth, they have investment in the series of initial projects, such as Gemini, which, as I said, is one of the first ones. So in Series A, they must have made amazing profits due to the success of Gemini. But this shows that actually large banks invest quite early, and they are definitely monitoring the situation and the developments, and are able to seize opportunities even though some risks are presented. So large banks are indeed ready to take the risks and promote crypto landscape. Now, another prominent environment in which large banks invest to is marketplaces and the tokenizations of assets used for asset management purposes. Here we are in South Korea, one of the freest markets on earth, and where capitalism, low taxations are definitely one of the fundamental drivers of the growth of the market. We have KB Investments and Hana Venture that are buying stake, actually a quite important stake in terms of buy-sell standards, and that is for, as I said, for the tokenizations of some assets that can be then used in the blockchain for trading and for investments from institutional investors, from the clients of both the financial entities, the RKB Investments and Hana Ventures, and these represent a further customer reach, a further provision of services from both the platforms. Now, the top French retail bank, Crédit Agricole, this is actually in Italy. So the Italian branch of Crédit Agricole, as I said, the greatest French retail bank, has invested in BlockInvest, which is a startup that also promotes asset management operativity thanks to the tokenizations of multiple assets that entail both real estate and fixed income assets such as bonds. So that allows Crédit Agricole to provide further services. In terms of the sales and trading, I would say bank and the division in terms of sales and trading, because of the different assets that can be provided, different solutions that can provide for customers, and further increases its reach. Now, another part of uh, the monitoring in terms of crypto development, it's definitely uh, the data analytics platforms that study trends, that have projections in terms of uh, new new capabilities, new enhancements of services that can be provided. So crypto data providers have uh, two of the greatest, say, um, companies that operate in this niche of the industry. They're Coinmetrics and Amber Data, and they have been the target of multiple investment banks. As we say, we have Coinmetrics, Goldman Sachs, and BNY Mellon, but they are benefit from their expertise in terms of the intelligence, the data, and the possibility that results from this data to have better understanding of the risks that both the bank and the customers incur when investing in products that are crypto related. Amber Data, exactly the same thing. It's a bit more focused on DeFi, so the financial part of the crypto landscape. So taking a bit, going a bit further away from Web3, but indeed a niche that is in high growth. And Citigroup is one of the greatest banks from the bulge bracket so one of the greatest Wall Street banks. They are investing in this sort of services, so in data analytics regarding crypto markets. Now, security as the breach of different platforms. Uh, it's something that has negatively impacted crypto markets in the latest last months, in the last years actually. Security is one of the is the last of the most important on the top interest of banks. Certic is a leader, and Goldman Sachs, as one of its most important investments, has Certic. But Certic is actually has been the target of multiple banks. We'll see in a second uh, the full picture of the investments. We'll see the full spectrum of investments. So I want to show you so that you can have here the full spectrum. So as we said, fundamental. So coin metrics, Goldman Sachs, BNY Mellon, as you can see right there. Um, we have Talos, which is a platform that is providing compliance services. So we'll help banks in being compliant to different regulations and providing perfectly compliant services and products as soon as some financial products that will be available and correctly regulated that will allow the banks to have a competitive advantage um, over other financial institutions. Uh, Certic, as I said, one of the greatest investment of Goldman Sachs at the top of the food chain uh, for in terms of security. Now, I would like to go back on Talos. As Talos has been one of the most important investments for most of the banks. Right here, you can say BNY Mellon, Citi, and Wells Fargo have both invested in it. So the company, as of last year, was raised around 100 million in one of the series of the founding, which means that it's providing uh, great services. And Wells Fargo, as I said, Wells Fargo and BNY Mellon and Cities are not um, are not the only one. Standard Chartered Banks is also sorry is also one that has invested heavily in the platforms. Multiple venture capital actually have invested in the platform. So we have DRW Venture Capital, and that is essentially the same scope because Talos is providing compliance services. It's providing um, expertise that is that it's regarded as an excellence in the market to be able to connect with institutional investors that have large amounts of capital available and are ready to invest, but need in exchange certainty. So Talos is able to connect traditional financial investors with crypto and digital assets and accelerate their adoption, and therefore is able to create opportunities for bank and for the company that have invested in it to have a significant advantage in terms of the services that can be provided to the customers. Now, there was one of the banks that are the most important banks, the biggest banks, such as JP Morgan. They are indeed at the top of the list in terms of operativity and in terms of banking. Now, JP Morgan is a very unique and specific case. The reason for that is because JP Morgan was able to develop a division that have in-house research and in-house development on blockchain technology. So, division of JP Morgan, code named Onyx, is able to provide 4 different services, 4 different products for customers, and that isn't through a third party company in which JP Morgan have a stake in. No, that is from internal divisions of the actual bank. It's which have the JP Morgan name and have developed mostly in house. So the first one is Link. Now Link and Coin System. So the first one and the fourth one that you see have actually similar objectives, but some is for some banks and customers that are non entities, so non institutions. So again, institutions are hedge funds, are venture capital, are pension funds, so are financial corporations. They are financial entities. So to Link provides services essentially to these. It's a sort of further development of prime brokerage. Let's say could be that, because as I said, as it's known, prime brokerage provides data sharing and information to hedge funds, and here we have it through a blockchain, using blockchain technology, which further enhances security, further enhancing reliability, and we have a seamless payment related data sharing, as I said, between institutions by using Link. Now, coding system is very similar. We have again payment solutions, instant transfer across different banks, across different countries, and using different currencies, different assets that are available in the crypto space, that are available through the bank and through Onyx. And that is also possible thanks to in-house developed ledgers. So that has the complete reliability of JP Morgan because they developed it. They are in charge of its security. So they have the brand that is enhancing the reputation. The other 2 products are Onyx Digital Assets. So this is also to further enhance asset management capabilities, to tokenize assets and then provide them to financial institutions. So I would say it's the most fintech part of the venture, and to that further allows the bank to provide this sort of services to customers. And then we have Blockchain Launch. So Blockchain Launch is simple. Is a research team that has created a launchpad for new applications, for networks, for different protocols to launch on a platform that is implementing blockchain technologies, but is doing it from the perspective of a traditional bank. So we have 4 innovative products that have been produced by an in-house development of and an application of blockchain technology with Onyx and JP Morgan. Now, just to go back to finish on JP Morgan, which ties in with, for example, Wells Fargo. We have I just want to mention Elliptic there is another analytics. So it's a data company. It provides data, provides trend analysis, variance analysis for both firms. And I was able. The reason why I mention is because it's one of the greatest Series C's for data blockchain firms, and they were able to raise 60 million thanks to the contribution that were the highest actually from both Wells Fargo and JP Morgan. Now we are coming to the end of this presentation, to the end of this event, but I would like to provide a final gateway from large banks to venture capitals, of how these are working together, what has happened in the financial world, given the latest industry turmoil, what has happened and how this has changed the relationship within large banks, crypto businesses, and also venture capitals. Now, as you all know, large banks, as you all know, lately in the past months, in the past year, interest rates have caused financial distress of some of the banks that didn't manage the risk properly, they didn't have enough liquidity, they were insolvent because of their assets that were heavily impacted by the raise of interest rates. Some of these banks are, for example, Signature Bank or the Silicon Valley Bank, which is, I think, the most well-known to have collapsed. And the UK branch of the Silicon Valley Bank has actually been bought for £1 by HSBC. And so most of the banks have greatly contributed to some of the crypto businesses, especially Silicon Valley Bank, because in the Silicon Valley, the bank has a culture of investing in startups, in early stage ventures, in early stage projects, and of course, crypto businesses are some of them, as they are being created and being founded continuously. However, due to the collapse of these institutions, crypto businesses and even venture capitals, so in financial entities also that operate in the market, they did need another provider of liquidity, provider of capital, another investor. So as a delightful surprise, to be honest, JP Morgan, among other banks such as Citi, Bank of America, and Wells Fargo, they have opened the doors to Web3 startups, to VC funds, which further proves the slow commitment, but gradually increasing, I'd say, to and their approach, although cautious, to the crypto landscape, because although there have been scandals, there have been turmoils on both the crypto industry and the banking industry, banks are still investing, are still keen in providing loans, in providing financing to venture capital funds that invest in crypto and Web3 startups, DeFi startups. So this is another very positive sign of what is to come, of what we can expect in terms of the relationship between large banks and crypto businesses. Now, I have, just to give a bit more context, to give a bit more strength to what I've previously stated, two testimonies, I would say, from a venture capital owner and actually a partner, the venture capital called Placeholder. There's Chris Bernisk and Yossi Hassan, which is the CEO of Metaversal. There is simply a company that operates within the NFT and Web3 market. They are both significant companies in the space in terms of of their value, of their valuation. As a matter of fact, Metaverso raised 50 million in the last fiscal year, proving to be extremely valuable for investors and to have a solid project that are being developed. And the testimony is, I mean, it's quite self-explanatory, to be honest. It's quite eloquent. For example, Yossi Hassan has clearly said they are all being more open to banking with us. Before, you just wouldn't get through compliance, and now magically you might. So this is just a very eloquent statement and proof that large banks are opening to crypto. They are opening the doors, providing the funds, creating opportunities for crypto to proliferate, to develop, and to provide services and opportunity to customers. Now, as a last topic, there are the last two slides. I would like to provide some quick information on the uniqueness of crypto venture capitals, because so usually venture capitals in every other niche, they acquire a high portion of equity in the project they are investing, and typically these equity, because obviously most of these startups are private, they're obviously not publicly traded, are very liquid. So the equity is quite stagnant in the fact that the venture capital will hold it and is unable to do any further financial operations following with these investments. Now, in the case of crypto venture capitals, the case can be made for a higher flexibility. So venture capitals in crypto, because of the fact that they acquire a stake into in protocols, in platforms, in decentralized exchanges. Now this stake is more liquid because it can be traded on decentralized exchanges, on centralized exchange, on every exchange, in fact, that has listed their tokens and the governance tokens. So although obviously this is it has to be considered that most of the tokens that venture capital receive are vested tokens, so there is a window of time in which these assets are completely liquid, but they can indeed be used as collateral to provide further liquidity. They can be used for other investments, although it's quite risky because the nature of the equity itself is risky in the first place. But definitely, assets that are tokenized are more liquid because they can be exchanged. They have a immediate market value, and even companies that are operating within the crypto space, they have an immediate valuation. Whereas companies that are not in the crypto space, so startups, they don't have a clear valuation. There is no financial model that is instantly available for them to be evaluated. So this allows venture capitals to have some hedge funds activities to have different operations and to have more flexibility, which may further make the case for venture capitals that operate in crypto to be less risky in the long run, of course, compared to venture capitals that do not operate in crypto. Of course, this is offset by the fact that the industry is itself very volatile and therefore opens to more risk, more just market risk, so more just intrinsic risk. But in the long run, if you expect the industry to grow and to be less volatile, we could make a case that venture capitals in crypto are indeed more flexible and can then administer uncertainty in a more interesting way compared to other venture capitals that do not operate in crypto. As it was before, I had presented you with a managing director of Koji Capital, which is a venture capital just like 3x Capital. They have declared his stance on this specific topic, David Mack. which clearly says that crypto's venture capitals are effectively hybrids. When teams are raising seed capital to get resourced to deliver to a product, our approach is the same as the most venture investors, which is acquiring stake, acquiring equity in a startup that operates in the crypto landscape. However, when we realize our investments and hold liquid crypto assets, we start to resemble a hedge fund, often using that liquidity to support the early product we invested in. So, as I said, the liquidity can have further scopes, and for that reason, can open to some hedge funds operations. This was my final topic that I covered, and we've reached the end of this event and this presentation. And I would like to thank again 3x Capital Education. I'd like to thank especially Oksana for being so patient with me. I have to say, I would like to thank you for attending this event, and it's been my pleasure to be here with all of you. And this is the end of the event. Thank you.
Thank you, Manfredi. I really like the presentation from your side, and I believe I personally got lots of insights. Especially, I like the slide where you shared about the at which stages banks invested into crypto startups. It's really interesting, and I'm curious to know your opinion. Why do you think they especially choose the startup, especially in these stages? And like as we can see, someone really invest in the early stage, but we have some who invest in like a later stages. Why do you think, like what is the main reason why they decided, like this fund, these banks especially decided to invest in such a level of like investment rounds?
Yes, the reason for that is that the banking industry is extremely competitive. And so banks search for opportunities to acquire or maintain a competitive advantage. Um, Companies that provide services for security, for asset tokenization, for in terms of technology, or for crypto analytics that explore the market and evaluate that through the the representation of trends and projections are not only are market leaders because of their expertise, but they also allow for the banks to have to have the greatest knowledge, the 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 highest monitoring capabilities, and the enhancement of of their view of possible opportunities that will allow them to maintain their competitive advantage, to be fully competitive, to immediately recognize an opportunity and be able to invest in it. And that is why banks are always monitoring this kind of opportunities and investing rather early when they see the value and the potential of startups that are in the market.
Yeah, thank you, Manfredi. And I'm curious to know your opinions. Like, what challenges our banking industry need to overcome in order to have this adopting of cryptocurrencies?
So so crypto banks and corporations usually rely a lot on their reputation of their brand because that allows them to retain customers and to keep providing them services, which obviously impacts positively their profits. So in terms of the challenges, it's um, the the possibility to have safe delivery of products, of financial products. So the main challenge is the future regulations that will be applied for this product, because regulations do impact the way the bank does business and can limit the provision of products, but also provide safety, not only for the bank in the provision of the product, but also for the customer to make sure that the product will indeed benefit them in the long run. So the biggest challenge, in my opinion, is by far um, the the approach to regulations in order to make sure that banks can thrive and promote development. And the second one is security. We've seen in the crypto market breaches of multiple platforms, exchanges, centralized exchanges, just basic DEXs, so decentralized exchanges, bridges that connect different blockchains, different ecosystems, and those resulted in millions of capitals of funds lost because of hackers' activities and breaches, and that is a significant threat to the wealth of the people that have invested in it, that have their resources allocated in this kind of projects. So those are the two main challenges for banks, because especially for the reputations that can be impacted from that, and therefore the customer base that may be lost.
Yeah, yeah, totally agree with you, and thank you for sharing. Yeah, I believe that banking system and banks itself can play a significant role to promote mass adoption of cryptocurrencies. What are your thoughts about that?
Um, so the banking system definitely is one of the critical drivers for the mass adoption, because of the uh, well, we can differentiate two banks I mean, two different banking entities. Ones are the private banks and the central banks. So in terms of the um, central banks will provide a framework of regulations and of I would say of opportunities for the central banks, for the private banks to thrive, and will implement central bank digital currencies that will also allow for a better track in terms of funds. So if for example, if some funds are lost, uh, some some funds cannot be tracked because a lot of cash has been used in an economy, while the central bank digital currencies can quickly tackle this problem, because of course is a digital currency that can they have a blockchain which provides total transparency on payments. So that is a critical driver, and it's one of the reasons why, for example, we can see a real life example in Nigeria, as I mentioned before. They launched. They were one of the first countries in launching a central bank digital currency, and now half of the population is doing some sort of operations with crypto, has adopted crypto, which is definitely evidence for uh, a further development in the future that can also happen to multiple countries in the developed world. So that is great. In terms of private banks, because of their customer base, of their reach, of the fact that they can offer one product to millions and millions of customers, of course, it is important. It is important not only because of the customer reach and the customer base, but it's fundamental because of the financing that they can provide to startups, to venture capitals. As I said in before in the presentations, they can give a solid financing landscape to uh, to crypto businesses, which will allow them to undertake the most projects and to be competitive within the market, to proliferate and create options and opportunities. So both the banks are definitely important.
Yeah, thank you for sharing, Manfredi. Um, Really huge, little thank you that you're sharing with us today this info, and it's really interesting how the crypto adapting our everyday lives and starting um, from the crucial part of our life, and really like to see the traction of implementation cryptocurrencies in current banking system. So really, thank you for sharing this info
Thank
with us today. I believe we will also share the presentation from you with our audience at our LinkedIn page. It was a pleasure to speak with you today, as well as participate with you together at 3X Education program. And yeah, let's keep in touch. And thank you for being with us today.
you for everything. The pleasure is all mine.